a study looking at what drives innovation cycles in America. And believe it or not, the two biggest innovation cycles in the U.S., which was 1948 to 57, which was a boom time, and 1991 to 99, were two periods when the world was short structurally of labor. So you had a prime age workforce growing slower than the total population, which means there was a lot of pressure on either wages or ways to innovate to produce more output. We've gone into a period of structural deficit of prime force labor, which is going to last till 2045, which means another tech cycle, I think, is underway. And for viewers, it's not just like Nvidia makes chips and you got to buy it. It's just that there may be an 80 million prime age workforce shortage globally. That's $3 trillion of wages that won't be spent on labor. Nvidia's revenues are 100 billion. So to us, this is really early stages for the amount of money that will be spent on generative AI.
This insight highlights a powerful link between labor shortages and technological advancement. Historically, when the workforce struggled to keep up with population growth, innovations surged to fill the gap. Today, Nvidia is at the heart of this emerging tech cycle, providing the AI-driven solutions and advanced chips that businesses are turning to as automation and digital transformation accelerate. With a potential $3 trillion in unspent wages due to labor shortages, companies are investing heavily in tech-driven efficiency, and Nvidia stands to benefit as a key enabler of this shift.
Let's stick with that tech trade. Despite these recent declines, our next guest says that Nvidia, Tesla, and Palantir have showed the most net buying of active stocks on his platform. Favors some low volatility, high dividend names here. Steve Sosnick's with us, Interactive Brokers chief strategist, joins us here at Post 9. It's a good day to have you.
Good to see you.
Thanks for coming in. Talk about why those names in particular are moving.
You know, we're still having this little battle between, what I'm going to call FOMO, MOMO, and NOMO. Basically, there's still this fear of missing out. We see here just the SPUs have bounced like 40 points since I've just been walked from there to here. And so people really don't want to miss what they see as a buying opportunity because for the better part of the last few years, every dip has been a buying opportunity. This one, not so much. And I think a lot of what we see are active traders sort of wedded to that strategy, hoping this will pan out. And, and those moments where it does pan out, we see, people jumping right back in.
Right. So this notion of a retail buyer strike combined with a hedge fund momentum unwind, is that a fair framing at the moment?
To some extent, I would say our customers really range the gamut from small investors to large investors, and very heavily, the numbers I'm seeing are very heavily weighted toward active traders, because if I'm looking at activity numbers, it's going to be the most active customers. One of my friends at the SIBO calls it pro-tail, because they're sort of retail, but a bit more.
Nvidia's impressive $100 billion revenue is just the beginning. As companies pour billions into generative AI, Nvidia is positioned to capture a significant share of that spending. Despite recent market dips, investors remain drawn to big names like Nvidia, Tesla, and Palantir, a sign that many still see these stocks as key players in future tech growth. With active traders closely watching every move, Nvidia's momentum continues to reflect strong market confidence in its long-term potential.
So what are they doing with tech, the heavily owned Mag 7 stocks?
As of the last time I checked the numbers this morning, they were still buying. Nvidia remains the most actively traded and the most actively bought stock on our platform, Tesla being number 2. These stocks brought them to the dance, and they're not abandoning them.
Was Friday a good example of that, too? What do you think happened there Friday? Or was it about month end, something else?
I think Friday was month end. I think that close was for lack of a better word, phony as can be. But it shows you how the market, as soon as there's a buyable dip with any little bit of momentum, people jump on it. And it was probably no coincidence that it was month end, certainly the month end bargain hunting, but also no coincidence that it was a Friday where you had weekly option expiration, and of course the daily option.
Nvidia continues to dominate investor attention, remaining the most actively traded and bought stock on major platforms. Despite market shifts, investors are holding firm to key tech giants like Nvidia and Tesla, the stocks that have consistently delivered strong returns. Friday's market movement, described as somewhat artificial, highlights a pattern. Whenever Nvidia dips slightly, eager buyers jump back in, seizing what they believe to be a valuable entry point. With month-end factors and options expirations at play, it's clear that Nvidia's momentum is still driving significant investor interest.
What about the day part first 2 hours of trading versus last 2 hours? Are we seeing evolution in that kind of behavior?
I don't have clarity into what our customers are doing in that, but what I see in terms of the market behavior, yes. I mean, I think this was the rare morning where we didn't wake up and see futures just grinding higher. Wake up and see them up 5 points and then see them up like 20 or 25 points by the time we get in, or sort of the market opens. And so there's been this grind higher because people are used to it. We didn't see that today because the news was overwhelming. We also sort of see the grind into the close, and that more or less depends on the character of the move. But we do still, even yesterday we saw a big bounce, relatively large bounce into the close because it was the first of the month, and so presumably money flowed in.
I know you've got some thoughts on the VIX, which just hit 25.
Okay.
And whether or not that is a fair measure of fear at the moment or not.
My comment about that is VIX is not a fear gauge, but it plays one on TV. It's not specifically constructed to reflect fear, but of course it does reflect people's perceptions of volatility over the coming 30 days. That's what it's constructed to provide. And so yes, when things are moving around a lot, people then project that they will continue. So, but here when we see VIX around 25, roughly speaking, that's about a 1.5% daily volatility for the coming 30 days. And when we think about the movements we've seen over the past couple of days, when we think about the potential for a government shutdown, frankly, in less than a week and a half, is it wrong to think that we could get 1.5% daily moves on SPX? No. So I think it's not. It is reflecting more caution, not reflecting outright fear.
What about cash levels?
I don't have a ton of clarity into what our customer cash levels are, Sarah. I wish I could tell you.
But so then how do you describe sentiment overall? I know you talked about buying the dip. So is it overall optimistic?
It still remains. Again, when I checked sort of our top 25 list today, it was not just the names that I mentioned. People were buying triple Qs. People were buying SOX L, the triple SOX. There's still this love of leverage, and I think until you see that shaken out, where people are maximizing risk, at least active customers, active traders are maximizing risk, you're going to get this kind of grind back and forth. You haven't seen the full shakeout yet.
Right. Kind of like the leveraged home builder, like nail, right? That's been a tough lesson. Steve, thanks. Good to see you.
Thank you,
Appreciate
Carl.
it very much.
Market behavior is evolving, and Nvidia remains a central focus. While typical patterns often show futures steadily rising through the morning, recent volatility has disrupted this trend. Despite this, investors continue to jump in during market dips, reinforcing Nvidia's strong appeal. The VIX, often seen as a fear gauge, reflects this growing uncertainty. With the VIX hovering around 25, it's signaling expectations of daily market swings between 1% and 1.5% over the next month. This aligns with concerns like a potential government shutdown, adding to investor caution. Yet despite these risks, sentiment still leans optimistic. Traders are actively buying leveraged plays like triple Qs and SOXL, showing that many are still chasing high-risk, high-reward opportunities. Nvidia's position as a top pick suggests confidence in its long-term strength, even amid unpredictable market moves.
Yeah, I want to pick up where Dom and Becky just left off there with Nvidia. Calls for at least maybe some opportunities in terms of valuation. Do you think Nvidia is more attractive right now at this valuation, or do you think there's still some legitimate concerns out there about AI, DeepSeek, and lower price models?
Well, I really think NVIDIA is quite attractive here, and there's a couple of reasons why. Well, let's take a look at the valuation first. The stock is trading in line with the SOX index now, and is trading at only a slight premium to the S&P 500. If you look at it historically, that's historically where the stock's bottomed on a valuation perspective. But more importantly, we have improving fundamentals from here. Gross margins for NVIDIA should probably bottom in the April or the June quarter and improve to that mid 70% level as we head throughout the rest of the year. And then if you look at the supply chain, things are actually looking really positive for NVIDIA. So, Han Hai reported its February numbers this morning. They're the biggest, partner for NVIDIA. And the February numbers were up 56% year over year in terms of revenue. And then if you look at the fundamentals of other parts of the supply chain, memory prices are starting to increase for both DRAM and NAND, both up mid-single digits off the bottom. And then finally, probably most importantly, if you look at NVIDIA's revenue growth from here, we're going to just keep seeing sequential acceleration. So I kind of put it together, and I like the setup in the stock.
Yeah, and we had that raid in Singapore where it turns out that the chips being sold to Singapore were finding their way in China.
Nvidia's current valuation presents an interesting opportunity. The stock is now trading in line with the broader market index, with only a slight premium compared to the S&P 500. Historically, this is where Nvidia's stock has tended to bottom out, a promising sign for investors looking for an entry point. More importantly, Nvidia's fundamentals are improving. Gross margins are expected to recover and climb back to the mid-70% range later this year, signaling stronger profitability. Supply chain conditions are also looking favorable, with key partner Hanhai reporting a 56% year-over-year revenue increase in February. Additionally, rising memory prices for DRAM and NAND further point to improving market conditions. With Nvidia's revenue growth expected to accelerate in the coming quarters, the overall outlook appears positive, reinforcing the company's strong position in the expanding AI and tech landscape.
Do you think the administration here and what they could do with Nvidia further restricting chips, even perhaps the cheaper chips that they're allowed to sell to China right now, should that be a concern for investors at all?
Well, looking at the fundamentals, what's happened since DeepSeek, if you look what's actually happened since DeepSeek, is NVIDIA demand has gone through the roof, both in China and in the US, right? So if you look at the supply chain, H20s, those cheaper chips you were referencing, the demand for that has really surged since DeepSeek. And then if you look at what's happening in the US, Hopper pricing and all the clouds has gone up. So NVIDIA is clearly the biggest negotiating leverage tool that Donald Trump and the administration have with China. It's one of a few. And I think it'll probably be part of a grander bargain in terms of the China deal.
Dom, when you look at the companies that are doing all of this spending, and obviously the customers of NVIDIA, like the cloud platforms, really interesting divergence in terms of how the market is treating them. You have Alphabet right now trading at a 10% discount to the S&P. Rarely seen that through history. Meta, on the other hand, has seemed like it's gotten it all figured out. Are there opportunities you see in those divergences, or how do you think about that group in general?
The issue with all the hyperscalers right now is that CapEx intensity has to continue to increase, right? And frankly speaking, NVIDIA is going to capture a lot of that economic value from that capital intensity increasing. I think the reason Alphabet struggled so much is really a function of its search business more than anything else, right? Just think about your personal day-to-day experience. How much more are you using ChatGPT and Perplexity relative to Google search? My gut is probably a lot. And so that search business is so big. And if you look last quarter, that grew 12% year over year. I'm not sure that search business can continue growing at 12%. So yes, I like YouTube. Yes, I like the cloud business, but it's really the search business that is under attack, which has historically been one of the best businesses of all time, frankly. And if you look at Microsoft and Amazon, all three of the hyperscalers were capacity constrained this quarter. They actually would have sold more in their cloud business if they had more chips from NVIDIA. And I think that's partially the Blackwell delay, which should improve in Q1. And so of all those three, I personally think Amazon's the most attractive. We have a few different moving pieces for Amazon, but most importantly, I think operating margins continue to improve throughout the year for Amazon.
Nvidia's position in the global tech landscape remains strong, even with concerns about potential chip restrictions. Despite political uncertainties, demand for Nvidia's cheaper H20 chips has surged in both China and the US, showing that geopolitical tension hasn't slowed Nvidia's momentum. Meanwhile, rising prices for Nvidia's advanced Hopper chips demonstrate the company's strong pricing power and essential role in AI development. The conversation around hyperscalers like Alphabet, Meta, and Amazon also highlights Nvidia's advantage. As major cloud providers increase their capital spending to expand AI infrastructure, Nvidia is poised to capture a significant share of that investment. Even with Alphabet's recent struggles, largely linked to concerns over its search dominance, Nvidia continues to benefit from rising demand for AI hardware. Interestingly, Amazon stands out as a top pick due to improving operating margins and its growing cloud capabilities. This further reinforces Nvidia's critical role in supporting these tech giants as they scale their AI-driven services. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.